Yo, what's up, Rockteller Nation? It's RT checking in. If this is your first time, welcome to the no BS corner of YouTube, where we don't just toss around buzzwords like macro, fundamentals, ratio charts, and market cycles to sound smart. Nah, we slice right through the fluff and zero in on the one thing that actually moves the needle. Where the hell is the real money heading? Today, we're locking in on Alkane Resources, a stock that's graduated big time from straight junior explorer mode into a legitimate contender. So, buckle up. Let's get ahead. Here's the plot twist. Alkane Resources is no longer just that single mine Australian gold story. Before the Mandalay merger, this was mostly about Tomingley and long-term development dreams. But after August 2025, boom, different company. Now we're talking about a real producer with multiple mines, actual cash flow, and a much bigger operating platform. This is where the story gets interesting. The three-mine foundation is where the machine starts printing. Tomingley is the reliable base, producing gold with infrastructure already in place. Costerfield brings the high-grade kicker, with gold plus antimony exposure, which is not your average mining bonus. Then Bjorkdal in Sweden adds scale and diversification, although costs are higher. So, okay, this is no longer a one-horse race. Alkane now has 3 engines running. Now let's talk Costerfield, because this one is spicy. It is not just a gold mine. It is a gold antimony mine. And antimony matters because it sits inside critical mineral supply chains, from flame retardants to military uses and batteries. When the mine produces both gold and antimony, those byproduct credits can improve margins. Basically, it's like digging one hole and getting paid twice. Not bad, right? Then we have Boda-Kaiser, the sleeping giant. This is the long-term heavyweight in the story, with a massive gold-copper resource. It is not a high-grade, narrow-vein mine like Costerfield, but this is about scale, copper credits, and Tier 1 location. The numbers are big, the capex is big, and the timeline is long. So, don't treat this like tomorrow's catalyst. This is 2030's optionality. Now the balance sheet, and this is where Alkane gets some breathing room. With strong cash, bullion, investments, and operating cash flow, the company has flexibility. Boda-Kaiser needs serious money, around 1.8 billion Australian dollars pre-production capex, so funding will matter. Debt, partners, royalties, stage development, everything is on the table. The good news is, the operating mines give Alkane a self-funding engine. And hey, if you're sick of market commentary that sounds smart but somehow says absolutely nothing, you'll probably like rockteller.com. Over here, we talk macro, fundamentals, ratio charts, market cycles, stocks, and miners in a way that actually makes sense. No Wall Street fog machine, no recycled headline soup. So yeah, if you want less fluff and more signal, subscribe to this YouTube channel. For the newsletter, visit rockteller.com. Again, rockteller.com. Let's figure this market out together. Management matters, okay? Because mines don't build themselves through spreadsheets alone. Nick Erner led Alkane through Tomingley growth and the Mandalay merger. The CFO now has to keep capital discipline tight. The board brings mining, banking, and operational experience. This is not a tiny founder-led startup guessing its way forward. This is a professional team handling a more complex, multi-asset business. The bull case is simple but powerful. If gold prices stay strong, Alkane has serious leverage. Production guidance of 160,000 to 175,000 gold equivalent ounces gives direct exposure to gold strength. Add Costerfield's high-grade gold antimony upside, longer mine life from Tomingley and Bjorkdal, and Boda-Kaiser optionality, and suddenly the upside case has real muscle. Execution plus gold strength equals leverage. But all right, let's not pretend this is risk-free. Costs matter. Bjorkdal's AISC is high. Costerfield needs tight underground grade control. And post-merger integration is never automatic. One bad quarter can make investors very grumpy very quickly. Then there is Boda-Kaiser, which needs huge capital and a long approval process. Great asset, yes. Easy road? Absolutely not. The catalyst timeline is where investors need patience. 2026 is the consolidation year. Alkane must prove it can hit production guidance, control costs, generate cash, and keep exploration moving. Then from 2026 to 2027, Boda-Kaiser de-risking begins. After that comes approvals, feasibility, financing, and eventually the final investment decision. So, okay, this is a multi-year chess game, not a one-week trade. All right, here's final verdict on Alkane. I'm giving it a solid 4 out of 5 stars. The company scores big on its producer status, strong gold leverage, that high-grade antimony kicker, solid cash flow, and the massive Boda-Kaiser upside still to come. What's holding it back? Higher costs, operational complexity, a bigger share count, and it's no longer that tight insider-controlled junior. Still, the journey from pure explorer to legitimate mid-tier producer makes this a very credible growth story. All right, folks, that wraps it up for today. Hope this breakdown gave you a solid feel for Alkane Resources and why it could become a real mover if they keep executing well. Quick disclaimer, this is all for educational purposes only. Do your own research. Everything is at your own discretion, and always buy or sell at your own risk. If you liked the video, smash that subscribe button and turn on notifications. Grab our newsletter at rockteller.com. Drop any stock names you want us to cover in the comments below. Stay sharp, stay curious. I'll catch you in the next one.